Hello and welcome everybody to the Housing Tips. It's the show where we talk about housing news, housing information, and everything in between. I'm your host, Eric, and joining me once again for our sixth episode is Jesse Mendoza. How are you today, Jesse?
Doing good, Eric. The real question is, how are you doing?
I think Jesse's implying that last week it was my birthday and I finally joined the 30-year-old club. Honestly, I feel every second of it. The second that clock struck 12, I felt it in my knees and my back, and I felt to myself, well, it looks like I'm on the downhill. No, I'm just kidding. But besides that, fantastic week for me. It was great. Another year of learning. So, I definitely want to kick butt for 30 and make 30 a fantastic year. But how was your weekend, Jesse? Did you do anything fun? Did you do anything exciting, noteworthy?
I don't know if I mentioned, but I did go to see Hamilton at the Pantages Theater. It was amazing. I had a great time. And welcome to the 30 Club, bro. We didn't plan this. We're matching, so you're officially you're doctrinated to the club. Welcome.
Definitely. Black shirts today. It was not planned, definitely for both of us. I just happened to wear it's between black or green. So next week, maybe it'll be a green shirt, but we'll definitely test it out. But besides that, we have a fantastic show for everyone today. And it's actually fantastic news that we're talking about our topic today because our topic today is how to invest in the California real estate market. But it's a great way to segue that the interest rates just dropped a few hours ago yesterday. And we're going to talk about it today, and we're going to go over different ways to invest in California real estate. But we're going to go ahead and start that with our first topic is, drum roll for that, regions with growth potential. That was a topic that Jesse wanted to bring up today, but want to ask more questions about growth potential, and I'll let Jesse take it away from there.
Yeah, so a lot of people just ask us like how can I invest, in California, right? Prices are higher, interest rates making it difficult. So a lot of people will kind of freeze or get stuck or not know what to do. So we want to focus on regions with growth potential, like markets where housing is relatively affordable compared to like the metro areas like LA and San Francisco, San Diego, right? And so tips to kind of see, okay, like what regions are you talking about? You can see if there's any like new construction of like major retail chains. There's like proximity to transportation. I know the metro and the lines, they've been expanding the lines as well. And so investing where areas where there's like that planned infrastructure improvements, if there's new public routes, if there's, that's going to lead to future appreciation. You know, I think despite high costs of entry in certain areas in California, California has shown like its economic strength, diverse cities, and just potential for long-term appreciation. People that got into the market 4 or 5 years ago already seeing huge appreciation on their properties. So okay, looking to see what would be those areas. A lot of people tell me like Inland Empire, huge growth just due to influx of people because they're priced out of all those coastal cities, all those metropolitan areas, like Coachella Valley area, Joshua Tree. There's just some examples of um, just change and influx of people that are kind of heading to those areas.
No, I definitely agree. I say that every single video, 100%. I vibe with what you're saying. I did have to bring up two things though. One, I did visit the Coachella Valley, actually the week of Coachella, the music festival. I didn't go to the music festival, I just went to visit some friends there. And by far, that area has grown exponentially. There's a lot of money being poured into that area. Just like you said about how people think in the future, they want to buy a house that's appreciating over time or has a big appreciation. I know the Coachella Valley saw a massive influx of growth when the Coachella Music Festival started. That houses before then, the houses weren't very expensive. They're a very low income area. The second Coachella happened, a lot of developers and a lot of individuals started to pour money into the area in anticipation for the music festival as the festival got bigger and bigger. Where, I mean, correct me if I'm wrong, but I've heard that some people in those 2 weeks that Coachella happens, people can pay for the majority of their mortgage for the year in those 2 weeks if they make their house, very uh, a vacation-esque, where you could stay there for 2 weeks and you pay a high amount of money, but then they can actually pay for their mortgage during those first 2 weeks. And have you ever experienced something like that, Jesse?
Oh yeah, I mean, I went to Coachella this year, had a great time. I actually stayed in Desert Hot Springs area because the Coachella like city was like full, like almost all the Airbnbs were packed. And so speaking to my Uber, she was just like, "Yeah, like I rented out my house. I'm staying like at the back house with a family member, and it's just gonna pay for the rent for these next couple months." And so Coachella Festival, Stagecoach. There's like new events that are popping out. Golfing is like huge in that area. The PGA West, the Indian Wells Resort, La Quinta. So a lot of like major tournaments and other tournaments that are like now flocking to that area because they're seeing people are going, they're attending.
No, I 100% agree with that. Actually, it's very interesting that you bring that up. Have you ever heard of the Augusta rule, Jesse?
The Augusta rule. I'm not gonna lie, no.
No, definitely. That's something that I recently learned about. The Augusta rule is that you can actually rent out your house because in the area of Augusta, Georgia, where the Masters are played, you can actually rent out your property for 2 weeks a year tax free. You don't have to file it with the IRS. You could literally rent your place out for 2 weeks. And correct me, in the comments if anyone ever thinks that that's different than that. But the Augusta rule was made for people that had those 2 weeks where it's crazy busy and they just want to rent it out. They want to maximize what they can charge and then, rent it out tax free. And that's something that I've seen that I think over on the West Coast, they should call it the Coachella rule, where you could rent out your property for 2 years,
Yeah.
2 weeks, excuse me, and be able to pay tax free. And it's actually another question I had for you is that I've also heard too that if a person or if a Costco is opened up in an area, a lot of people invest in that area because they know it's becoming a more well-to-do area because the average price for Costco orders are well in the hundreds of dollars per time you go to Costco. But I've been told is that if you see a Costco being built, Costco does all the background research. If you see a Costco opening, it might be a good time to invest. What are your thoughts about that?
Yeah, I mean, large retailers like Costco, Whole Foods, Walmart. It's a strong indicator of like future real estate growth. You know, they do their extensive research, and so you don't have to really do all that like homework. They do thorough market research, and they're looking to see, okay, is this going to signal confidence in the local economy and potential for growth? So if Costco sees it as a proper location, that's going to be a sign like other businesses may follow. You know, Areas near Costco locations, they often really see like a big rise in property values because of that demand. You know, and so it's convenient. You have a big retailer nearby, and so other businesses are going to flock into that area, and that creates what like job creation, economic growth. There's hundreds of jobs. Local businesses also get a boost, and so there's a win-win. Commercial, demographic shift. So um, that's a really good tip. If you see a Costco nearby, hey, good area to invest.
No, definitely. And no shade towards Sam's Club. Sam's Club could be seen as the same way as well. They're both competing. Are you a Costco or Sam's Club guy?
I'm a Costco guy. Sorry.
I agree. I love Costco too. I know it's expensive. I know that, they're changing things around, especially now you have to scan your card. But yeah, Costco, just sitting inside a Costco, I feel like everything inside Costco, they know how to sell to you. And it just
But
feels like there's everything.
yeah, but I love Sam's Club in case they
Oh,
want to
yeah.
sponsor, our YouTube channel. We love you, Sam's Club.
There's nothing wrong with Sam's. I actually have both memberships because, especially in California, I know that's something that gets judged a lot about us. That, for instance, gasoline prices are very expensive in California. However, depending on which line is shorter, I'll choose either Sam's Club or Costco, depending on where I'm at in California, or if it's a little bit cheaper at Costco or a little bit cheaper at Sam's Club. They always try to compete, play the game of cat and mouse with each other. But speaking of Costco's and speaking of Sam's Club, typically people that buy houses and go to Sam's Club, they're typically buying for bigger households. They're buying for something that's a little bit, not just someone that for like myself that lives in a condo or an apartment, maybe someone that lives in a big house, has a large family. So I did want to transition that into our second topic is maximizing your lot if you are looking to invest in real estate in California. And this is 100% Jesse's idea and topic. So I want to let Jesse speak to this as well. What are your thoughts about that, Jesse?
Yeah, so it might be a good idea with how expensive maybe a second home can be. Maybe a good option of, okay, if you already have a home, how can I invest in an ADU and building a small ADU on the property? If you have, a good enough backyard, alley access, or even garage conversion, you have huge potential and being able to get rent from ADU, creating passive income. So that extra rental income can really help with paying off that mortgage faster. It's going to increase your property value. If you're having a detached ADU, you can add a junior ADU as well. Later on we can talk about like lot splits and creative ways that you can do it, but it's going to be win-win of how you're able to help with the passive income, with increasing your value. And hey, it can be really flexible for families. If aging parents or young adult children, and you're able to still have your privacy. There's still really cute ones of like how you have your privacy and your fencing, and can also reduce need for families that for senior care facilities and not needing to kind of rent. So a lot of alternatives where you're able to kind of use the property that you're in right now.
No, and I agree 100%, especially, living in Southern California. Both of us have Hispanic heritage in us. It is big for the grandparents and even great grandparents to live with the family. And that's something you see a lot of in California, especially in the Inland Empires, Orange County areas, where instead of pushing a grandparent or great grandparent into a facility, what you can actually do is build like something like a casacita, like an ADU. I know that's very huge around here, especially in the 1920s, 1930s, when a lot of the older houses were built here in California. They came with a detached garage. Having garages attached to a house is not something from the olden days. It is something very new. And in the past, what a lot of the times would happen is, you would have your main house, then you would have a garage that's detached where you could park your car, you could work on your car, and you can do other things. But that has changed so much drastically now, where a lot of houses have attached garage, which is fantastic for convenience. However, having that detached garage, I've seen a lot of individuals, from my own evidence, turning those old garages into ADUs or game rooms, as they call it, and expanding your lot and giving yourself, like you said, the ability to have two houses on the premises for the price of one. Yes, it's expensive. However, what I've seen is it's a lot cheaper doing something like that instead of building out a whole nother house. A tip for myself to invest in this market, especially invest in California, would be to buy something of an older house. Maybe it's a little bit smaller, but it comes with a detached garage. That's huge for me. And that's something I'm always looking for is, you know, maybe the house isn't as big and fancy as modern houses, but having the ability to have a detached garage and turn it into a game room, turn it into a man cave, as they call it, or just using it as a casacita or an ADU and transforming that into two primary living residents. I think for myself, that's a fantastic idea. What are your thoughts about that, Jesse?
Yeah, and it's cool that, before buyers kind of steered away from the detached garage, right? I
Interesting.
want to, before it'd be like, I want it attached so then I can, grab the clothes and go straight to the, washer and dryer and do laundry. Corner lots were also a big kind of like some people would steer away, right?
Interesting.
I don't want to be
Wow.
on a corner lot, and also alley, right? Be like, ooh, it has an alley. Now, those are huge, huge things are important when you think about an ADU. Detached garage, great. They have their privacy, they have access over there, and you have your primary residence on this side, and you have that space. Corner lots, is great in regards to depending on, layout and positioning. That's going to be huge and helps. It might even be, for a different, driveway and access. And same thing for alley too. If there's an alley access, there might be where, you know, the detached ADU, they might come from the back. You kind of enter from the front. So you have that privacy. So a lot of these properties that people kind of steered away from in the past are really key ones that can help when we talk about maximizing your lot and building an ADU. And like you mentioned, cost, right? It can add up, but cost can average depending on your project 100,000 to 300,000 if it's a garage conversion or if it's from ground up. But I mean, finding a property 100 to 300,000 in California.
That's very difficult. Extremely difficult. And then I think too is something that one of my friends did actually is that when she bought a house, and this is a much older friend, she bought a house in the 1990s. She worked very diligently to pay it off. And then when she paid off the house, what she did is she gave the house to her daughter and she said, "Hey, the house is yours. However, I want to take out a second mortgage and build a granny flat, a casacita." So now she has her own private residence, but it's not attached to the house. She can have her own space to relax and live the retirement life. And that's something that a lot of people don't think about is, hey, maybe the house isn't perfect now, but it's something in the future we can upgrade, make it look nice, change the air conditioning, change the paint, fix it up, make it more efficient, all that good stuff. But I agree with you. Investing a few $100,000 seems like a lot of money up front, but in the long run, having the ability to pay off a house and then add to the house and having a large lot is something that's very important to have those goals in the future. And sadly, I know with modern houses, large lot sizes are going in the past, and now everything's big, 3 floors, 4 floors, 5 floors, single family homes with a attached rooftop bar that you can go onto is becoming the norm. But I agree with you. Finding an older house and making it into yours, finding a house with a detached garage is fantastic to help maximize your lot size and maximize what you have on your property. But speaking of, maximizing what you can do and what you can't do, I want to move into our third topic, which is leveraging your financing options. And that's something, we're going to talk about more as interest rates keep falling, as was seen by the federal government. The federal bank said out, hey, in 2026, they want to have interest rates at 3.5%. So different loan options are going to be more viable depending on what happens. And I'll definitely let Jesse speak more on this. But what are your thoughts, Jesse, about the current, financing opportunities and leveraging it to help invest in California?
Yeah, so I mean, we talked about regions with growth potential, whether if it's your first property or second property, um, if it's maximizing your lot and ADUs. And then the question is like, whoa, how am I going to get this money, right? Or how am I going to be able to finance the project? And so leverage really what means is borrowing capital to really increase that potential return, like on your investment. So a traditional mortgage that most people know, owner occupied, 20% down, right? Then there's FHA or the first time home buyer programs that people know of. That's government backed. You can do as low as 3.5% down on a property. I think a really good strategy that a lot of people in the biz talk about using that 3.5% down FHA, and you can use that strategy to buy like a 4 unit complex. Being able to
Wow.
live in one, rent the other three, that assists with like the mortgage. Or hey, let's think about also future appreciation and future rents. That could be huge. And then being able to kind of leverage, if you're wanting to eventually move out, how you can structure that. So there's a lot of different like financing and loans, but a lot of consumers don't know about. Portfolio loans, usually that's retained by like the lender. It's more flexible. So some examples of those are like jumbo loans. Those are loans that are you're able to get more than the conforming limit. Like Fannie Mae and Freddie Mac, usually the limit's about like 726, depending in most areas. And then there's like non-QM loans. Those usually don't have like strict guidelines of like debt to income ratio. There's like bank statement ones for like people who are self-employed. I've had individuals like, hey, I'm self-employed, I'm not going to qualify for a loan, and they like spent like years not even thinking about it. And I'm like, no, there's like bank statement loans. Like, you don't need to have the traditional W-2. They just verify through your bank statements rather than tax returns or pay stubs. And so there's a lot of different options, and it's connecting to the right people that know these different options and what you can do. And so one of the most common ones that I've seen people do for like the ADUs is like the HELOC of, if you have equity
I was
in your
about to ask you
property.
that. What is a HELOC loan? I know that's huge on social media, but of course, tell me, what is a HELOC loan and how can you leverage those?
Yeah, if you have like significant equity, you can use that HELOC to like finance your real estate investment. So you can borrow against the value of your primary home. There's also for
And
a very,
how much can you borrow against your house? Is there a
well,
set limit?
your lender will kind of look and see how much you can borrow, but usually it's depending on different factors. Usually it's like the value of your home. Usually it's like the amount of equity that you've built up, and like the lender terms. Usually they allow you to borrow like 80 to 90% of your home's value,
Oh,
minus
wow.
minus any like mortgage balance that you still owe.
No, definitely. And I 100% strongly believe this tip using a HELOC. However, I'm also a very big proponent of using HELOCs to pay off your credit card debt. Use it to help improve your property, use it to invest into the California real estate or invest into real estate. But I've seen too many people that have taken advantage of HELOC loans and then they just rack themselves up with more and more debt. And it just becomes a vicious cycle where they're, hey, I want a new car, or hey, I want a boat. And so you take out a HELOC loan where, exactly like you said, it's a loan, it's not free money. You have to pay that money back and it just adds to your mortgage. And I agree, that's something that a lot of investors I've seen on social media and have met with that leverage HELOC loans and use the leverage in their properties to help purchase other properties or how to upgrade properties. But no, that is fantastic to know. And I think just the idea of loans, I think that's something we should discuss in future videos as well, as we could make an entire video just on loans as well. But I did want to thank you so much, Jesse, for the time going through all this information. Is there any closing thoughts you want to talk about or something to summarize this entire video with?
No, yeah, I mean, thinking about California real estate, it can feel daunting, it can be tough, but I think connect with the right people where you can have these conversations, connecting with your team of, okay, what could be, regions where I can start out, and then a future plan of like how I'm able to, what to do with my property if I'm thinking about, my dream city that I eventually want to move to. Um, maximizing your lot. So what adjustments, what changes, like what could be ideas that I can bounce around, and looking to see of like not having that fear in regards to the financing. Sometimes it involves a little bit of risk when you're going to get that return, right? So maybe we pull like that HELOC and it can feel a little bit nerve wracking, but we're smart about budgeting and cost and setting aside in case of any emergency, and then the projecting like the rent and things like that. It'll be a good, cash flow opportunity for you. So I think, good to take time to kind of look at everything and be patient during that process.
100% agree. I know I say that's almost my key phrase is I 100% agree. But that is something, and I hear especially from older individuals, and they all say is, even though yes, I just turned 30 and I feel very old and my knees hurt, but I do know that a lot of people say in your 20s and 30s when you build your wealth and when you move on into the future, you live off of that wealth. And a lot of older individuals have told me in the past is just be brave. Be brave in your 20s, be brave in your 30s. Those payments look like a lot of money to maybe purchase a house now, but in the future, those payments look a lot smaller. And as things get more and more expensive due to inflation. Yes, that's something we all have to deal with. But as time marches on, it actually gives us the opportunity to leverage that debt and leverage those payments where they become smaller and smaller over time. But besides that, I wanted to thank you so much for your time today, Jesse. If any of this information sounds interesting or you learned anything from this video, please consider liking this video and subscribing. Until next time, this is the Housing Tips. Have a great day.